of that policy. So your policy, your gift acceptance policy, what kind of gifts will you accept and how will you accept them, is a great way to manage those expectations. Remember Paul's example of Garth Brooks? Again, managing expectations goes a long way to quelling issues like that. So my gift acceptance policy might say we accept these types of gifts, or if you try to give us this, we're going to have to go take it to an accountant. Or, because of our morals, because of the mission of our nonprofit, we don't want these types of gifts, right? So it's, again, managing those expectations. So, and how should you accept them, right? So if somebody gives you cash and publicly traded securities, generally okay to accept it, usually okay to ascribe a value to it, but cash isn't the best thing to give a nonprofit a lot of times anyway. In-kind gifts are wonderful. So just think of it this way: if I give a nonprofit 501c3, I'm looking to get a charitable deduction, and I have a capital asset. Say it's stock, say it's a closely held stock, say it's land. Okay, I give this capital asset, and there's a lot of caveats here in the tax laws. But if I take a stock for $10,000 and I sell it, and maybe I'm in the 20% capital gains bracket, and I have $8,000 after selling it, and I give that $8,000 to the charity, and now I have an $8,000 charitable deduction, and the charity got $8,000. Alternatively, if I just give that asset, that capital asset, in kind to the charitable organization, if it's one that I can deduct the full fair market value for, okay, then I give that $10,000 stock to the charity. The charity then sells it. They don't pay capital gains tax a lot of times on these kind of gifts. They get $10,000 worth of something. They get $10,000 in cash for selling it, and then I get a $10,000 deduction. Everybody's better off, right? So in-kind gifts are really what you should be doing. If you're not, well, at least have a policy that addresses those. Now, most in-kind gifts should not be automatically accepted, and that's definitely where your policy should come into play. Things that should not be automatically accepted and maybe not automatically ascribed value to would be real property, personal property, life insurance, non-liquid securities. Life insurance, for instance, like retirement assets. They passed that law again, which means that if I'm 70 and a half or older, I can give $100,000 of my IRA, which that's a year-by-year thing. We don't know if it's going to be around next year. Sub-S stock. Before 1996, you couldn't even give Sub-S stock to a nonprofit corporation. And Subchapter S is is a tax election. Okay, so be on the lookout. Just because you're getting stock from an LLC, that could also be a Subchapter S corporation, okay, for tax purposes. And then we have Sub-S rules. So it used to be if it was a Sub-S, it was an Inc. It was an incorporated, it was a company. But LLCs can be Sub-S's now, and a lot of them newer ones are. Now, if I have Sub-S stock, a whole different kind of set of rules apply, and a lot of the income from that becomes unrelated business income, and a lot of issues there. So, again, when is the donor, on your same policy, when is the donor encouraged to seek professional advice? And when will the nonprofit not give advice? Because that's a conflict of interest. If somebody's going to give me a large gift, I don't want to advise them as to the tax consequences or what's going to happen with that. That's where you need your advisors, your accountants, your attorneys. And, what's not acceptable? Remembering your audience. Gift substantiation. Obviously, this should be a policy. Most of you, I'm sure, already do this, but all donors need to get a receipt. But it's required if it's over $250 for that donor to be able to deduct that. Appraisals. Generally, if the value of the donated property exceeds $5,000, you need some sort of valuation or qualified appraisal. That's where the accountant comes in, except not for cash or publicly traded securities, but pretty much everything else. Gift annuities. I only mention this. We could spend the next couple days talking about charitable and planned giving, all the different ways you can give assets. But gift annuities are specifically addressed by state law, and if you're a nonprofit corporation that offers gift annuities, you're exempt from being regulated by the South Dakota Division of Insurance. Okay, unless you haven't been around for 10 years and if you have less than $500,000, I believe. So, gift annuities, it's a simple contract between the donor and the corporation where I give the corporation some cash, I get my charitable deduction now, and then I get an income stream for the rest of my life, or joint life with the spouse. Or I could defer it. I could give it to you now, I could take a deduction, and then not get any income back, because I do have to pay some income tax on that until 20 years from now. But I bring this up because this will not change under the new law at all. This is still going to stay exactly the same. Again, in fundraising, you should have fundraising policy and generally follow state laws. So I also bring this up as an example of is your gift policy on your website, and do you have sample language for things like bequests? Okay. There was an article in the Rapid City Journal a month or two ago that talked about the local Humane Society, the Black Hills Area Humane Society. And they have not been receiving gifts because people give it to the Humane Society, but they don't say it specifically. What happened was they said that second bequest, right? So I have a will, and in my will I decide to leave a specific amount to the Humane Society of the Black Hills. And what happened was they just said the Humane Society because they talked to their attorney, and I do estate planning, and every single meeting I have, initial meeting, we talk about the charitable question regardless of their net worth. And they might say, okay, I want to give it to the Humane Society. Okay, done. They get $10,000 and it went to the national organization. The national organization doesn't provide the local organization anything. No funds. And so, just as a general practice, if you go on a lot of nonprofit corporations' website, there's a donate now button a lot of times, but is there sample bequest language, right? Is there a little brochure of here's all the other ways you can give to us, okay? That's so critically important because the first thing I do when somebody wants to make a charitable gift is I look on that corporation's website or I call them and find out how they want to receive it. And hopefully they know, okay? But, say very specifically, put the employer identification number in there. Tell whether or not it's general or restricted. All very, very important and avoiding the issue of it going to, it's going to the Humane Society, but the wrong one, and the local one's the organization that really needs the cash right now. Executive compensation, no real requirements, especially on the state level. But again, there's a rebuttal presumption of how you set your executive's compensation, and it's on that Internal Revenue Code section. That's also addressed in Appendix D of my materials. Conflict of interest. Now, it's not just for directors and officers. If you have a material interest in the transaction, abstain or follow procedures on how to nullify that conflict. And what's nice about the new act is that the new act expands upon, the current act surely does address conflict of interest transactions and how you have to act when there's a conflict of interest. But the new act really expands upon it. And it discusses when an action done that was conflicting might be void or voidable. And I encourage you to look at section 110 and 111 of the new act. And I'm going to show you at the end of my presentation where to find it. But section 111 actually talks about even a safe harbor. Here's what you do. Here's procedures you follow. If you're I see a business opportunity as a director that might conflict with my nonprofit corporation, and the new act really lays out what procedures you follow in order to have a safe harbor when I can actually engage in a conflicting interest transaction. You should have an investment policy, and again, investment policy is one of those things where with a person with a fiduciary duty towards a nonprofit corporation, the funds should be invested prudently. And this is something really you should farm out to your professionals, right? This is one of the best things to do there is to meet with that investment advisor, that investment manager. And you can rely on experts now as a director. I might not be, I'm doing my best practices by relying on this expert. But it's a little gray. Under the new act, it's very specific of when you can rely on experts, and that's in my written materials too. But it really calls out, you can rely on these kinds of people. This is when you can rely on one of your officers. This is when you can rely on your accountant, your attorney. to make sure that you're covered and the corporation is covered, so that we're not delegating, I'm not delegating my authority to do things, but I'm delegating my liability to that professional advisor. And that's really what we all want to do, right? Delegate that liability. You should have a whistleblower policy because federal law prohibits all corporations, including nonprofits, from retaliating against an employee who blows the whistle on financial management or accounting practices. And an ethics policy is something people don't mention too often, but you could implement a policy depending on the type of organization you have. What behavior do I encourage? What behavior do I discourage from my agents, my employees, my officers, my directors? As an attorney that works with nonprofits, a lot of times I'm called in on the formation side of things. I help revise the bylaws or make policies. But a lot of the day-to-day, the year-to-year interaction with professionals tends to be between the nonprofit corporation and their accountant, right? The relationship with that entity's accountant is so critical. And this is just some guidelines on selecting an accountant, right? Their experience, and are they independent, right? You might have an accountant serving on your board of directors. You want to use them to look through your books, right? No. And then personality. A lot of times this isn't really addressed, but if you are not really comfortable with picking up the phone at any given moment, anytime a question arises, and calling your accountant, then maybe you should look to see whether or not you have a really good relationship with this accountant. Because that 5-minute phone call, if you have a question about something financial, is way, way cheaper than the alternative. It's always a good idea to pick up that phone. So what kind of relationship do you have with your accountant? Audits. Some states require audits, ours does not. And under federal law, it's required under certain circumstances. It's also required, for instance, you have to have a full-blown single audit if you're a nonprofit that expended over $750,000 of federal funds. As of last year, it was $500,000, but they raised it to $750,000. So, but you might have other reasons to audit. And when I say audit, there's the general, there's a single audit, there's this independent audit we all know of, but there's a lot of smaller versions, which there might not be called audits. It might be called agreed upon procedures or something like that. But regardless of the size of your nonprofit corporation, talk with a CPA that does audits of nonprofits and get one periodically done, no matter your size. And ask them to really delineate and put forward in writing what they will be doing for you. Okay? You can do an agreed upon procedures. It's much more efficient and a much smaller version than what the audits that a lot of people are used to. And they'll do that if you ask. But again, you might discover waste, you might discover missing information, and again, you might be required to do this under circumstances like bank loans or certain grants, of course. Form 990, like Paul said, this is accessible no matter what 990 you file. It's accessible at guidestar.org, as well as on other websites. One thing to think about with this is, we all talked about mission statements earlier, but it's really important to establish a narrative with your 990 because more and more people are accessing these. And more advisors are telling our clients with charitable intent to, hey, go to GuideStar, look them up. Because your 990, first of all, has your board looked at it every year? They really should. You should at least have one board meeting where you bring that forward and have them read it, or at least give them the opportunity to read it. Even for volunteer directors, it's very, very useful. Because your 990 should be something where you have no character limit and no subject requirements. You can just create a narrative about what your organization is about and use it as a marketing tool. Because it really is. And it's going to be more of a marketing tool going forward. So directors and officers have these individual responsibilities. I have a fiduciary duty, and I have to act with good faith in the best interest of the corporation, and I have to be reasonable under the circumstances. What does that mean? And it really means what we've been talking about today, implementing those kind of policies, as well as doing these kind of actions. And analyzing the information, attending meetings, making sure I attend enough meetings, reviewing the bylaws, giving people proper notice under the law, reviewing materials in advance if you can, investigating rumors, questioning, communicating. For instance, if I'm on a board and I'm always hearing all the information from just one staff member, now that happens quite a bit because we have a lot of small nonprofits in South Dakota, but one thing to look at, are you always getting all of your information from one source? That's typically not a good idea. What kind of questions are you asking? Is there a way to get some better oversight into that aspect of it? And again, ensuring accuracy, abiding by policies. I mentioned the new act there. It's what Bobby mentioned earlier, is that you can have different officers, and they don't have to be called president and secretary anymore. The same person can do the same roles as a president and secretary. And then seeking advice and relying on experts, always critical. And I mentioned here again, like I did earlier, the new act really lays out when I can rely on experts and when I'll be covered if I do. And it's set forth in Section 87 and 92 of the new act. So that's our plan. And next up, we have the panel. And as they come up here, as Mr. Getzinger is going to introduce them, if we're connected to the internet, they want to bring up the website where all these materials are at. Not just the materials that we use to present today,